The value of that brand increases during inflation, just as the value of really any strongly branded goods. The best protection, the best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents.
Which of Berkshire's businesses are best suited to thrive during a period of high inflation, and why? Which will suffer the most, and why?
Yeah, well, the best businesses during inflation are usually the best. They're the businesses that you buy once, and then you don't have to keep making capital investments subsequently. So you do not face the problem of continuous reinvestment involving greater and greater dollars because of inflation. That's one reason real estate in general is good during inflation. If you built your own house 55 years ago like Charlie did, or bought one 55 years ago like I did, it's a one-time outlay. Whereas if you get an inflationary expansion in replacement capital without having to replace yourself. And if you got something that's useful to someone else, it tends to be priced in terms of replacement value over time. So you really get the inflationary kick. Now, if you're in a business such as the utility business or the railroad business, it just keeps eating up more and more money, and your depreciation charges are inadequate, and you're kidding yourself as to your real economic profits. So any business with heavy capital investment tends to be a poor business to be in inflation, and often it's a poor business to be in generally. And the business where you buy something once, a brand is a wonderful thing to own during inflation. See's Candy built their brand many years ago. Now we've had to nourish it as we've gone along, but the value of that brand increases during inflation, just as the value of really any strongly branded goods. Gillette bought the entire radio rights to the World Series in 1939. And as I remember, it cost them $100,000, and for that they got to broadcast the Yankees, I think, versus the Reds in 1939. And think of the number of impressions they made on minds in 1939 for $100,000, and they were getting into the minds of young guys like myself. I was 8 or 9, and millions of people, and they did it in those dollars then. And of course, if you were going to go out and try and have a similar impressions on millions of minds now, it costs a fortune. And part of that's due to inflation, part of it's due to other things. But it was a great investment which could be made in 1939 dollars that paid off in terms of selling razors and blades in 1960 and 1970 and 1980 dollars. So that's the kind of business you want to own. Inflation, Keynes said it many years ago, that it's an invisible tax that only one man in a million really understands, and it's a tax on people that have had faith in their currency that the government's issued. The best protection, the best investment against inflation is to improve your own earning power, your own talents. Very few people maximize their talents, and if you increase your talents, they can't tax it while you're doing it. They can't take it away from you. So if you become more useful in your activities, your profession, doctor, lawyer, whatever it may be, that is the best protection against a currency that might decline at a rapid rate. And the best investment, passive investment, I think is a good business. If you own an interest in a good business, you're very likely to maintain purchasing power no matter what happens to the currency. But it's interesting. In the United States, the value of the dollar since I was born has declined by 94% to 6 cents. So inflation is a very cruel tax on people who believe in fixed dollars, but things can work out pretty well even during inflationary times. I mean, if somebody told me when I was born, that the dollar bill is going to go to 6 cents, I might have said, let me go back. I'm not interested in emerging into that kind of a world. But actually, it's worked out pretty well, so I have no complaints.
So it could, if people were afraid, spark inflation. It could be ignited in the fears of the fact that there's just so much money, credit created, that we could have inflation. But it's sitting there right now primarily because I think that we go back to that thing where we started, confidence. Are you a bond buyer now at these levels?
No,
do you worry about inflation? Do you worry about the dollar?
It's idiotic to buy bonds.
Okay.
No, I mean, the one thing I can tell you very few things for sure in economics. One thing I can guarantee you is that the value of the dollar will be less 10, 20, 50 years from now than it is now. I mean, there's no question about that. So it's
So what are you doing to hedge your bets?
I just own good businesses.
That pay dividends?
Well, they don't have to pay dividends necessarily. I mean, if we own Marmon, we've owned that now for 3 or 4 years. It doesn't pay a dividend, but it goes out and builds the businesses it has, and it acquires new businesses. And you've got a few choices. You can go with fixed dollars one way or another. Your money market funds, bonds, or anything else. That's guaranteed to not work. It's so funny. I mean, it is funny for the people to do it, but when you put your money in something that's supposedly safe, if you put your money in a money market fund or treasury bills now, that is guaranteed to go south. You can buy farms, you can buy apartment houses, duplexes, various kinds of real estate, or you can buy good businesses, or you can buy little pieces of good businesses. Now, among that choice, good businesses are the cheapest by some margin.
Okay, so does that give you an outlook for the stock market over the next 10 years? If you know the dollar, okay.
Yeah, 10 years from now it'll be a lot higher. I just don't know about 10 months from now.
Okay.
But
are you putting targets?
We have spent in the first 9 months of the year, we spent $9 billion buying a new business, Lubrizol. We spent $1 billion on tuck-in acquisitions for our various businesses. We are going to have over $7 billion spent on plant and equipment, a record for us. 90% of it will be in the United States, almost double our depreciation. And we have bought 15 billion of marketable securities. I'm for buying good businesses, whether we buy them in their entirety or little pieces of them.
I think, is it fair to say you're bullish on America, both from a philosophical and an investment point of view?
Sure. I mean, I love owning businesses.
You get an inflationary expansion in replacement capital without having to replace yourself. And if you got something that's useful to someone else, inflation, it's an invisible tax that only one man in a million really understands, and it's a tax on people that have had faith in their currency.
Now, among that choice, good businesses are the cheapest by some margin.